Take a moment, look at the disclaimer. This content for educational, informational, entertainment purposes only, and nothing should be taken as a recommendation of buy, sell, or hold any securities at any time. We're here just to tell you how BTA analyze the market, how we look at the market. This is Rod from BTA, and we are known as the middle traders. Okay, we're going to start off here looking at the MarketSmith platform, the home page. And as you can see, the NASDAQ composite, this is the actual index itself. The NASDAQ composite closed up 0.9%, almost 1%. And the Dow Jones, the actual index itself, closed up, actually just I should say 1%, okay, 322 points. And the Standard & Poor's 500 closed up 1%, 39 points. And for the NASDAQ, it was almost 1%, like I said, and it was up 99 points, right? But now, look at here. For the NASDAQ, the volume was 13% lower. So it was on lower volume, okay? The NASDAQ went up, but it went up on low volume, below average volume. The New York Stock Exchange, which comprises the Dow Jones and the Standard & Poor's 500. The New York Stock Exchange volume, it comprises both of these, the Dow Jones and the New York and the Standard & Poor's 500. The volume was also 23% lower, below average. So we had lower volume, okay? So the index is traded up today, but they traded up on low volume. So when you're seeing a rebound rally, when you're seeing a rally that's trying to rebound, a rally that's trying to hold on, if it's happening on low volume, you have to be very careful and very wary of that. Be careful of that. Okay, let's go into the platform real fast. Okay, let's go into the platform real fast. So here is a daily chart of the DIA, the ETF that tracks the Dow Jones. Okay, now we're looking at the ETF. Just now, a few minutes ago, we were looking at on MarketSmith the actual index itself. Now we're looking at the DIA, the ETF. Now notice the DIA, okay, it did today close back above its 5 and 9 day moving average. The white line is the 5 day, the green line is the 9 day. It closed above it today. So for the last 3 days, we've been closing right at it or below it, right? So today we closed above it, but we still, look at that overhead, downward trending, 21-day moving average, okay? So we got the 21-day moving average right overhead at 312.89. We closed at 310.85. Okay, so really, all right, I always say it's nothing to talk about if we closing below a downward trending or sideways 5-day moving average. Well, it's above the 5 and the 9 today, but we closed at 310.85 and the 21-day moving average at 312.89. So you already know I got to wait until see what happens when it gets around the 21-day moving average. Can it hold above the 21-day moving average? And notice on the update today, we had this update today, right? It was a very volatile session too. The market was swinging up and down all day long. So very volatile. It wasn't steady at all. But even though on this update today, look at the volume. It was lower than the previous day and well below the average line right here. So the volume was not really coming in. The market rallied, but the volume wasn't coming in. We saw that on the MarketSmith platform. Okay, let's go and look at the structural chart real fast. And we had like I said, it rebounded today. It bounced off of support and it rallied up. That's true. That's factual. We can't deny that. The volume was low. But look where we at right now. Okay, we coming right to this overhead resistance level and this internal trend line right here. All right, you see that? It's all coming together right there. That's at 312.53. 312.53. We closed at 310.85. 312.53. It's just overhead resistance, and we got this internal trend line right here. This internal trend line is all coming to the same point right here, okay, at 312.53. What's at 312? What's at 312? Okay, let's go back. See that 21-day moving average right there? Remember that 21-day moving average I told you about? That's right overhead. Look, this 21-day moving average that's right overhead. 312.89. 312, a lot is coming together right there at 312. Be careful. You got to put it all together. Listen, you have to put it all together. Just be careful. We're still, if we look at the relative strength index, right? Look at the relative strength index. We're still below 50. All right. Here's the 50-yard line right here. The relative strength index is still below 50. We have 45.85. The check and money flow is still in the negative, but it is trying to improve. That's a fact. So the relative strength index itself is trending up just a little bit. It turned up today. And the check and money flow for the last 2 days have been trying to improve. You see, yesterday was a little higher than the day before, and today was a little higher than yesterday. So the check and money flow is trying to improve. We want to see it get back into the green. That's for sure. So we have to keep an eye on that. But we're still below the 50-yard line. We're still below the 50-yard line. All right. We got to try to get above the 50-yard line. That has been acting as resistance. Now, as far as the MACD and the stochastic, well, the stochastic improved a lot for the Dow Jones. All right. The stochastic improved a lot for the Dow Jones. Right. So let's look at the stochastic here. It's at 50.49. See the stochastic right here? It's at 50.49, and we got a bullish crossover basically today. All right, and the MACD had its bullish crossover. The histogram is in the green, and it's trying to turn up a little bit. All right, the KST is starting to squeeze. The no sure thing is starting to squeeze. All right, and look like it wants to try to get a bullish crossover also. But well, let's see what happens. We just have to keep an eye on it. But for right now, that 312 level is the level we got to look out for. All right. That's the level that we're keeping our eye on. All right. Now look at the volume for the unbalanced volume line. Okay. Look at the unbalanced volume line. All right. It is still in this somewhat downtrend. You see it right here. It is still in this somewhat downtrend. You see that it's pointing straight down. Okay. And if you look at it, we are well priced. This is the line chart of closing prices here. Price. This is the price, the previous peak for price that we was monitoring in the past. You see, we have found support there and bounce, but the unbalanced volume line is well below it. Now, the accumulation distribution line, I have to give it to it, is well above it. Okay, and the price volume trend is trying to test it, but we need to see that unbalanced volume line, okay, start moving up and trying to break above its previous high. All right, so that's the DIA. Let's take a look at the Standard & Poor's. Take a look at the Standard & Poor's, the SPY, the ETF that tracks the Standard & Poor's 500, the SPY, the ETF that tracks the Standard & Poor's 500. And look at it. Today we close right on the 5 and the 9. Okay. But at the end of the day, we have the same issue here. This downward trending 21-day moving average at 386.21. Okay, so we above above the 5 and the 9, the green, the white, and the green moving averages, but and we closed above it. We were below it for 3 days in a row, but this 386.21 level, this downward trending 21-day moving average, can act as overhead resistance. And notice that the volume today, even though it traded up today, the volume was much lower than the previous day. And notice on these down days, look at above average volume on the down days. Okay, above average volume on the down days. We got one above average volume here day on the up day, but most of the above average volume days are on the down days. Okay, let's minimize it a little bit and look at that. You see, since this sell-off, you notice, look at all the above average volume days. All the days where the volume was above average was mostly on these hard down days. On the days that we're running up, you're not really seeing above average volume coming in. Okay, so that's just something to keep your eye on, just something to monitor. Now, so that 21-day moving average on the SPY at 386.21 is something to keep an eye on. Now, look, this is the level that we have been watching. Okay, we back above it now. All right, we back above it now. This 381, this 380 level, this 380.54, 380.54 is right here. Okay, so this horizontal line right here, going from this fractal, okay, which had acted as support, we broke below it. Now we got back above it from acting as resistance. Now we back above it, 380.54. So this 380 level is important. Now notice we did find support. We talked about that yesterday at this downward trending trend line. Okay, we found support there for almost 3 days, and we still stand above this horizontal support level at 371.63. I said that if we break below 380, we might go back to 371. Well, it didn't make it there quite, almost there, but it didn't make it there. Okay, it didn't make it there. Got close, got real close, right? But it didn't make it. All right, we got as low as 373 today, and yesterday we got as low as 372.56. So I said it might go back. That's the next area of interest that we want to look at, 371, but off by a few pennies. All right, so but it broke below 380 level. We took a little small position, and it's back above it. Okay, so we're not holding any positions going into the long weekend right now for the SPY. All right, now let's take a look at the momentum with the RSI. Excuse me, sorry about that. Let's take a look at the momentum with the RSI. So here, as you can see, the RSI is still on the wrong side of the 50-yard line. We have 44, okay, 44.40. We're still on the wrong side of the 50-yard line, all right? And the check-in money flow, you can see the check-in money flow is still in the red. It's trying to improve a little bit, but the histogram is still in the red, telling you that money is coming out. That's bearish. That's not bullish, right? And we're still on the wrong side of the 50-yard line. We did get above. We didn't break below 40. That's good. We didn't break below the 40 level. We have 44.40. We didn't break below the 40 level at all, but we still haven't gotten above the 50 level. And getting above 60 is something that's not even a thought. We haven't seen that in a long time, okay? When we start getting above 60, then the bulls are starting to really gain control of the momentum. But that's not the case right now. Let's look at the unbalanced volume. As you can see, the volume is definitely, unbalanced volume line is telling us that the volume is still pretty much coming out of the thing, okay? Like we looked at with the Dow Jones, the accumulation distribution line is above its previous high, but the unbalanced volume line is not, and it's still trending down basically. So price is breaking back its previous high that we've been watching over here. We've been fluctuating up and down, above and below that level, around 379.40. Price is back above it. It's at 381.24. So that 380 level pretty much is what we're looking at. Well, the unbalanced volume is not above its previous high. Basically, it's not above its previous high. The level it was at when price was at 380, the unbalanced volume line is not there. Okay, so we got to keep an eye on the volume. We have to keep an eye on the volume. Let's look at the QQQs. All right, ETF that tracks the NASDAQ 100, specifically the NASDAQ 100. So let's take a look at the QQQs. And as you can see, the Qs is still trading below its five-day moving average, which is the white line, and the 9-day moving average, which is the green line. And the 21-day moving average is right overhead. Look, we got to keep an eye on these levels. Remember, we played right around the 21-day moving average right before we had the previous collapse. And the downward trend in 50-day moving average was right overhead. Well, the downward trend in 50-day moving average is right overhead again. And now we played around against the 21-day moving average most recently, and it couldn't hold it, okay? Right here. Broke above it just a little bit for 2 days. Couldn't hold it. Downward trend in 50-day moving average overhead. we broke back below it. Now we're trying to get back above the 5 and the 9. But just like on the DIA and the SPY, the Qs got a 21-day moving average right overhead also at 288. All right, so we closed at 282. We got the 5 and the 9 is right around 283 and 284. All right, then you got 288 is the 21-day moving average. So you have some overhead resistance. And notice that we did have that update today, right? We did have this update, and we're testing the 5 and the 9. We haven't gotten above it for the last 2 days. We're testing it today, but look at the volume, lower than the previous day. So there's no accumulation going on any of the ETF, major market index ETFs we looked at so far. You see, it's no accumulation going on. Now let's look at the structural chart for the QQQs, and basically we got back above the 280 level. All right, we closed at 282, and the aftermarket is still right around 282. Okay, this horizontal, which was prior support, now acting as resistance, we got back above this 280 level. So we had the 380 level on the SPY, okay, and we had the 280 level on the QQQs we was looking at. Well, we broke below it and we traded below it, but we right back above it. So this 280 level is key, all right? This 280 level is key. If it start moving back above the 5 and the 9, then of course, it's nothing to think about. We should never be holding that one, holding those short when the stock is above the 5 and the 9. So it only have like another $1 or so before that's a wrap. Now, if you look at the RSI, okay, if you look at the RSI for the momentum, you see we're still below the 50-yard line. We have 43.49. Well, at least we didn't get back below 40. That's good. But look at the taking money flow. The taking money flow for the Qs is still in negative territory. It's still clearly in negative territory. So the weight of the evidence, the weight of the evidence is still to the downside for sure. All right, but we have to see what happened. All right, we're gonna be monitoring that 280 level and that 5 and 9 day moving average. Okay, now look at the stochastic. The stochastic is trying to recycle up here and get back above its signal line. It's at 40.66. And look at the no short thing. It's also trying to squeeze and get a bullish crossover and get above its signal line. So we have to watch this. The MACD is already gave its bullish crossover and is trying to move up just a little bit. But price is the only thing that pays. These other indicators are just give us some confirmation of what might be going on. So we're going to watch that. Now let's look at the unbalanced volume. You see, it looks like on the unbalanced volume line, it looks like, let's put that, we need to put a horizontal line across here. So we put a horizontal line right across the highs. And you can see the unbalanced volume line has been fluctuating above and below this previous high. This here resistance and acting as support, this horizontal line right here at its previous high on the unbalanced volume line. We fluctuating above and below it. Today we just peaked our head above it. As far as price is concerned, the line chart of closing prices for the QQQs on this daily chart is still below its previous high, but it's trying to turn up just a little bit. And that's at the 282 level. Okay, that's at 282.59. So that 280, 282, 283, 284 for the moving averages, 283 and 284 for the 5 and the 9, 280, okay, on the structural chart, 282 for the line chart here of closing prices. You get the picture. Right around that 280, 281, 282, 283, 284 is right there, okay? That's the level that we're looking at for the QQQs. Can we get above it, stay above it, and start moving up? But if we do, keep an eye on the 21-day moving average. Keep an eye on the 21-day moving average. It is right overhead at 288. We have to get above that or that can be a problem, all right? Now let's look at the IWM real quick. And as you can see, the IWM closed right on its 5 and 9 day moving average. It closed right on the 5 and the 9. The IWM closed right on the 5 and the 9. It closed at 271.41 today. And that's pretty much right at the 5 and the 9 day moving average. It's all right there together. But we got the same issue. This overhead 21-day moving average is right here at 274. You see the volume was lower than the previous day. Okay, so no real accumulation even on this up day There was no real accumulation. We got the 21-day moving average right overhead at 174. Now, on the structural chart, we did get above this 170 level for the IWM. That was key. We did get above that 170 level. That was key to getting above that 170 level. Getting above it and trying to hold above it and stay above it is a key thing for the IWM. Okay, so we got to keep an eye on that. We have to keep an eye on that 270 level for the IWM. Let me bring over. Well, I don't have to bring that over. I think you know what that big, thick red line is. Okay, we've been talking about this big, thick red line right here. I don't think I have to keep saying this big, thick red line. You see that big, thick red line right there? You see it. Okay, that's the March 2020 highs right before the Corona collapse. We're back above it today. We got back above it. It seems like this 168.09 and this 168.90 level right here is starting to seem like some pretty strong support. Okay, we hit it for 3 days in a row, and we got back and we found support and bounced. Even when we broke below it over here, we only really stayed below it for 2 days before we started testing back up and trying to break back above it. So this 168.90 and 168.09 level, all right, it's seeming like it's trying to be some pretty decent support if we start breaking below the 170, this big, thick red line right here, the March 2020 highs, okay? So we got to keep an eye on that, all right? Even on the weekly chart, we fluctuating right around that 170, that March 2020 highs. We fluctuate right around that. We look at the weeklies later. So let's look at the RSI. As you can see, the RSI is still on the wrong side of the 50-yard line. We at 44, 45. We still well below it, but at least we still above 40. And the histogram on the check and money flow is trying to improve, but it's still showing negative. Still showing negative on the histogram. It's still in the red. Okay, it's still negative, but it is trying to improve. Over the last 2 days, it's been trying to move up a little bit, and let's see if we can get in the green and stay in the green. All right, but for the most part, it's been staying around the negative territory on the wrong side of the zero line. Okay, so let's take a quick look at the ITOT. As you can see with the ITOT, we are still on the wrong side of the 50-yard line. We have 44, 41 with the RSI, okay, and with the check and money flow, you can see it's still well in the negative. All right, so the money is really not trying to come in right now to the ITOT. All right, let's look at the moving averages for the ITOT. Closed right on the 5 and the 9. So you see it. It's right on the 5 and the 9. We closed at 84.63, and the 5-day, which is the white line, and the 9-day moving average is right there, pretty much at 84.63. Right overhead, we got this 21-day moving average is 85.75. Be careful. You see the volume was lower than the previous day, so the volume is not really coming in. No accumulation, no real accumulation happening right here. When the volume is above average, you know it's pretty much on the down days besides this 1 day right here, okay? It's right here. We had some really big, heavy volume, and that was on the rebalancing and on the option expirations. But for the most part, you cancel that out, okay? You cancel out them option expiration weeks and all that and days, and you see right here that mostly on the above average volume days, it's on down days, okay? We got one really right here. So we got, other than the option expiration. All right, so the ITOT is not showing no real accumulation. Right now, we just testing this overhead resistance at 84.59, which was prior support, this horizontal line right here at 84.59. We closed at 84.63. We got another overhead horizontal resistance area at 85.25, okay? So we're trying to test that 84.59, and then right above that is the 85.25. And where is the 21-day moving average? 85.75, okay? So you get it? You picking up what I'm dropping down? Are you seeing what I'm saying to you? 85.75, 21-day moving average. You've seen that on the DIA. You've seen that on the SPY, where some of these structural charts and trend lines are right at the 21-day moving average. Are you picking up when I'm dropping down? Like I said to you the other day, I'm not saying everybody should be short. No, that's not what I'm saying. But I'm saying you got to be very careful trying to be long. Don't get your head handed to you. I'm trying to tell you something. Look at the unbalanced volume line. It's well below its previous high. Price is trying to break above its previous high. You see that right here on the line chart of closing price. It's trying to break above its previous high, but the unbalanced volume line is well below it. The accumulation distribution line is well below its previous high. Price volume trend ain't nowhere near it. The volume is definitely not coming in to the ITOT, the Standard & Poor's Total U.S. Market ETF. Is not coming in. All right? Be careful. And let's finish up with the guppy. Well, as you can see with the guppy on the ITOT right here, we stuck right inside of those faster, shorter term green moving averages. You see it. The guppy is dead inside of it. We got to try to get out on the other side of that. That's at 85.11 right now. The top is 85.11. Look at the magenta line of closing prices. It's stuck right inside all of that. Look, you can't be careful. All right. Let's look at the DIA on the guppy. You see, it's stuck inside the faster, shorter term green moving averages, and the green moving averages is pretty much flat. All right. We're stuck right there. Let's see what happens. Can we get above it? And we get above it, then we're going to start testing this overhead, longer term red moving averages up here. The longer term red moving averages where we found resistance previously and it totally fell apart. Be careful. Let's look at the Standard & Poor's 500. All right, the ETF, the SPY. The SPY, we're spying on you, SPY. We're spying on you while you're spying. Look at that. The magenta line of closing prices is right inside the faster, shorter term green moving averages. We got our eye on you, SPY. And you got the overhead faster, shorter, longer term moving averages. If we get out of that, well, can we get back above it? But remember before, we got right to that and it fell apart. All right, let's look at the QQQs real quick. Look at the QQQs with the guppy. Same thing. We're right below them shorter term, right inside the shorter term, faster green moving averages. Okay, so what is the guppy telling us? Pretty much the momentum is to the downside. Okay, the momentum is to the downside. The last one's the IWM. Same picture. We inside the faster, shorter term green moving averages. The magenta line of closing prices. The faster, shorter term green moving averages are tightening up, but we got the overhead, longer term red moving averages right above our head. You already see what's happening here. Be careful. Be careful. There is no time to get courageous. Okay? There is no time to get courageous. All right? And if you look at the Ichimoku Cloud, you can see it is still bearish. It is still bearish. It is still bearish. Look at the cloud pointing down. Okay? The cloud is twisting down. The blue line's above the brown. You see the cloud pointing down? It's swinging down. The cloud is pointing down. Bearish. The long-term trend is down. The future cloud is down. We still got a TK cross, bearish TK cross over here, where the yellow line crossed below the magenta line, and we just in the magenta line, the Kijisen, the longer term moving average for the Ichimoku Cloud here is flat. I told you once before, a flat Kijisen can be a problem. Remember it was flat right here when we started consolidating and it fell apart? A flat Kijisen is a problem. You don't want to see a flat Kijisen. This is the Standard & Poor's, the SPY for the ETF for the Standard & Poor's 500 on the Ichimoku Cloud. Look, be careful. There is not a lot of momentum. The 21-day moving average is acting as overhead resistance, even for anything that's above the 5 and the 9. The 21-day moving average is right there. Just watch yourself. Be careful. See you in the next video.